You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
It is a dangerous world out there. Volatility is on the rise, and your clients' portfolios are under assault from a growing number of threats. Simple diversification is no longer enough to shield the assets under your protection. Registered investment advisors, financial planners, and asset managers need a new weapon in their war on risk. Welcome to the Advisor's Option, the program designed to arm busy advisors with the information necessary to properly manage risk in this volatile environment. From options education, trading strategies and tips, to industry news and interviews, you'll find it all on The Advisor's Option. The Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Swan Global Investments. Since 1997, Swan has been the leader in hedged equity and option income strategies with GIPS verified results. Swan provides unique and valuable solutions to the inherent weaknesses of asset allocation, offering defined risk strategies that allow upside participation while also protecting advisors and investors against market risk. For more information about our advisor program for separately managed accounts, Swan Defined Risk Mutual Funds, or our proprietary option overlay strategies, please contact Randy Swan at swanglobalinvestments.com. Think outside the style box. Think Swan when deciding on risk management solutions to market risk. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit orats.com or email Matt Amberson at matt@orats.com. And now, it's time to learn how to implement options in your practice. It's time for the Advisor's Option.
All right, everybody. That music means it's time once again for the Advisor's Option, the program here on the old network where we break down the sometimes scary, impenetrable, just arcane world of options for you, the busy financial advisor who wants to learn. Maybe you want to dip your toes in those options waters. Maybe your clients want you to. Either way, we got you covered here on the Advisor's Option. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the old Options Insider Radio Network. Many ways for you guys to get this fine program, as well as all the rest of the great content on our network. You can, of course, subscribe just directly to the Advisor's Option. Skip the whole rest of the network if you want. If you just want to mainline this program on your platform of choice, your iTunes, TuneIn, Stitcher, or if you want the whole kit and caboodle, well over a dozen programs, subscribe to the full network feed. That'll get you everything. We'll keep you busy. Daily news, option block, volatility views, all the good stuff we do here on the network, coming to you pretty much 24/7. So just subscribe once, set it and forget it. Of course, you can go to our website, theoptionsinsider.com, or indeed grab our mobile app if you want to take a deep dive into the archives. I know sometimes those apps and those services out there will, like iTunes, will limit you to the most recent episodes. So if you want to go deep, way back, a decade or longer into our history, you can do that in those places. Well, and of course, sometimes You can even join us live via Mixlr, MIXLR. Grab that link, set it and forget it, and you'll be notified the second we go live with all of our fine programs on the old network. And of course, however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom. We do, yes, we do like to hear from you guys. And joining me, we got a stocked panel today for the advisors options. Let's go around the horn. Let's start in the far northeastern reaches of the country, where we are joined by Matt Ambertson, the founder over there of ORATS, Options Research and Technology Services. Matt, welcome back to the Advisors Options, sir.
Mark, great to be here. A star-studded panel. I'm looking forward to it today.
Hope you brought your visor just to protect yourself from the glare, sir, of all the luminaries we have on the program today. But then we're going to keep the dial spinning. We're going to go a little bit farther south and east out there to the land known as Puerto Rico. We are joined by the dynamic Swan duo. First off, we got Chris Hausman. He's the Director of Risk Management and Chief Technical Strategist over there at Swan Global Investments. And we are also joined by Dan Nigoy, the Senior Trader of Strategy Development over there at Swan. Gentlemen, welcome to the program to you as well.
Mark, once again, always a pleasure to be here.
Thanks for having me, Mark.
And Dan, I know you kind of listened to the last program. We didn't get a chance to really participate. Why don't you go ahead and give our listeners a really quick overview of your background in the space and what the heck it is you do over there at Swan?
Sure. So I came to Swan a couple of years ago, and on the trading desk, I'm involved in the option and equity execution, and then I have some, consulting with the guys down in Puerto Rico. I'm in Southwest Colorado, but I have some consulting with them about strategy.
Oh, so you're in the Durango office too. So I needed to spin that needle all the way back to Colorado. You're screwing up my metaphor, but it's okay. We'll just pretend you're in Puerto Rico for the purposes of this introduction, at least. Then we're going to spin it all the way back around again. Usually he's in Florida, so he'd be closer. But we're going to spin it all the way back around to Chicago, which is where he is right now. Unfortunately, he's not in the studio for some strange reason. He's like 2 miles north of here. We couldn't get him to make it all the way down to the studio. Our old buddy, Mr. Eric Cott, the Director of Advisor Education over there at the Options Industry Council. Eric, welcome back to the show. It's been like a year. Where you been?
That's true, Mark, and thank you, listeners. Obviously, great to be back with you, with Matt, with Chris, and Dan. And obviously, I didn't come over to the studio today because you didn't have any deep dish pizza. If you had that over there, I'd probably be over there. I'm actually eating some of it right now. So next time you get my menu order right, I'll come there live. But being facetious, wonderful to be back with you and these great gentlemen.
Well, we got the green M&M's rider. We did not get the deep dish pizza. We'll have to add that to your rider for next time, and then we'll be all set for you in the studio.
That's a Burgoyne thing. Yeah.
Oh, that's okay. All right, with our team assembled and scattered indeed to the four winds, let's dive right on into the buzz.
Busy financial advisors don't have time to follow the latest developments from the options market, so we do it for you. It's time to get the buzz.
All right, everybody. Welcome to The Buzz. This segment pretty much is exactly what it sounds like. We kind of break down the buzz, the hot developments, the recent things that have been going on in the world of options that pertain to you. We know you guys are busy, you financial advisors and asset managers out there. You don't have time to watch the conferences and go to the events and look at the latest research. And so we do a lot of that for you here on the show. You're welcome. And so let's kick things off, actually. Let's give pride of place to my old buddy, Mr. Cott, just because he hasn't been on in so long. We got to catch up with him a little bit. Eric, I know you've been busy. Let's start off. The last time I saw you was down at the big Options Industry Council Conference. Say that 5 times, Vance. And you were busy doing your, I should say, aptly named Coffee with Cott session. Such a great name. I think maybe we should explore something like that for the network down the road, but we'll discuss that at a later time. I like the name; it's catchy. Whoever came up with that at OIC should be given a promotion there. But you had a great session, kind of talking about what's going on in the space, kind of from an advisor perspective. So why don't you maybe start there, break down kind of what you hit on and what probably people might have missed from your session.
Yeah, and I appreciate it, Mark. I would be remiss if I didn't start off first to thank you, because you are a tremendous supporter of not only the OIC, the Option Industry Council, but the industry, our conference. I mean, really, you go, to far out places to kind of bring the awareness not only to the financial advisors, which are my constituency, but obviously to institutions as well as retail clients. So we really want to reflect our appreciation back to you. But as far as the name goes,
it's just a big love fest here on the show. I appreciate the love, sir.
Yeah. Well, it's so important for us, and you bring it out to, the far reaches. And, it's interesting that the folks at NASDAQ, who are our sponsor exchange back in early May at Amelia Island, came up with that catchy title along with the OIC folks, The Coffee with Cott. It was an opportunity for me to have fellow advisors up on stage to explore how they're using options. Obviously, we all know on this call today, all five of us that, look, volatility's higher. We go back to February 5th. We've obviously seen things going on, with trade and a lot of, stories in the news, and that really kind of reflects back to the financial advisor. So I think this was really timely for us to have this at the industry conference to bring the message from financial advisors to a lot of the sell-side audience. Mark, as you know, I do believe Matt was there. I think Matt was there, but I know, and actually I think some of the Swan folks were with us in Amelia Island. But, summarizing, was just an opportunity for practitioners to share their knowledge, but also what's going on with their clients and how they're integrating option strategies, to kind of better fill, some of the voids, and why it has been so advantageous for them, not only with existing clients, but I think one of the messages that came out, Mark, was that it was helping them actually expand their practices.
Well, that is good because, for a long time we saw the advisors were kind of, shall we say, reticent to dive into the options pool. They were scary waters. They were dark. They were turbulent. They didn't really understand what they were diving into. So it's good to see that at the end of the day, because that's kind of been our persistent drumbeat on this show from episode 1. Hey, options are a great tool. They can help you grow your practice quite literally. They can help you have another weapon in your arsenal for a variety of different market conditions. And also, we've seen if there's been another persistent drumbeat in the world of advisors, certainly since we started this program, even if not longer than that, it's been the rapid encroachment and onset of the robo-advisors. And if there's any great antidote to that right now, or any great silver bullet to that, it's options, because they have a bit of complexity to them. They require a bit of high-touch execution. And so if you're the guy out there in the neighborhood or in your region or wherever you are as an advisor that can do this stuff, then you're kind of setting yourself apart. And so it's a marketing bonus. It helps attract higher-end clients and maintain them in the face of the ongoing encroachment of the robos. Was that a takeaway from some of the people you talked to as well, Eric, maybe on your panel or just in general, that they're seeing options as kind of that silver bullet to fight back against the robos? And what else? Any other interesting takeaways from your session, sir? How was the coffee? Was it tasty?
Well, the coffee was very tasty. I thought to myself that we might have changed it to cocktails with Cott, and maybe we would have had a full room, standing room only, because I think that all the fun that our industry had at the conference, maybe waking up that early for my session might have deterred a few people, but we had really a full group there in Florida. But what I would say, sort of leaning upon our colleagues at Swan and even Matt Oretz and such, especially, with Chris and Dan and obviously Randy being a good friend of ours, Mark, one of the proliferations we see a lot in the industry, and I think this answers your question with Robo as well, is the development and the increase in sub-advisory. Obviously Swan is a perfect example of that, where we're seeing a lot more of these asset managers, ETFs, SMAs, closed ends, et cetera, that they're offering strategies, but in a way that an advisor might not have to really, kind of manage positions. And Mark, you and I have talked about this before, not worry about assignment, all the other nuances go into if you're a discretionary advisor who is using option strategies on a daily basis. Here you can seek out a manager who is filling that void, whether it be income generation, protection, whatever it might be, and you bring them in as part of the relationship with your client. So we're seeing a lot more development of that. And, talking about robo as well, look, millennials are one of those constituents that obviously the OIC looks at that demographic, and there's a transition of wealth that's going on. It's something that we are paying a lot of attention to. Obviously, I think that's why robos have seen some of the growth. But, look, the markets are going into, sort of these volatile periods, as we saw for example, in the first quarter of this year, this is a brief shout out for the OCC, the Option Clearing Corporation. I mean, the OCC cleared record volume the first quarter of 2018. We also saw record volume in just this past month, Mark, as you know, in June. So that's not all coming from institutions and individual investors. That is advisors who are embracing strategies because they realize that this is a solution for clients.
I'm glad to hear that. Matt, I know you were down there at OIC with me. I do believe you actually caught Eric's session. I did not, A, because it was crazy early, and also B, because I was doing my own shows down. They keep me kind of busy at these conferences. Eric, if you ever make it to the studio, you'll see all the legion of OIC recording studio posters we have from pretty much all over the country here in the studio. So while you're eating your deep dish, you could check that out. But Mr. Matt, sir, any takeaways from Eric's session there, or were you just happy for the coffee because it was so early?
Well, what I've done, Mark, is sometimes down at those OIC events, they don't let the regular people in. You have to be a registered advisor to get in because it's always standing room only with Eric. But I have gone. This is new news right now. I've now got my RIA. I'm a pension consultant, registered, approved with the SEC, Mark. So now I could follow Eric wherever he goes.
Look at you! You can attend all of those events now. I guess you were just saying to yourself you didn't have enough events you could attend. You wanted to broaden your conference attendance schedule. Is that what you're telling us, Matt?
Exactly. And my lawyer said, listen, we're getting a lot of high-profile clients, pension funds, et cetera. We're working with them on back testing. Why don't we get registered, and it'll allow me, and it does, to do a few more things. We've just posted recently on tail hedging that we're noticing the NDX skew has steepened almost past and actually to the SPX path. So the skew of the NDX is now equal to SPX, which we haven't seen in a very long time. So I'm putting out commentary like that now, and I'm excited to be part of the team and see more of Eric and come at it from a different angle here.
So that was primarily because you guys found yourself kind of in the realm of, because you're doing a lot of back testing, the next step is, of course, maybe to recommend what they should do. So you thought the RIA would kind of help facilitate that process?
Yeah, that's the point. We can now comment on what we're seeing in our back testing a lot more. Clients are really asking us once they get the back test, hey, what does this mean? What are some other things that we could be looking at? How do we implement that? So now we have a lot more that we can say legally to help our clients out, Mark.
So is next step, is there going to be an ORATS asset management? Can we actually go and sign up for your fund, sling and skew across the place, or is that down the road?
I don't know. I mean, we're busy as heck right now, so I don't even want to think about that right now.
That's a downside. We get that question a lot. Are you going to do some sort of options insider asset management? One, I don't feel like doing all the registration. As you know, it's a pain. B, it takes a heck of a lot of time to do that stuff, as you Swan Boys know. And we have other things we do here that take up a lot of time. So I don't think I would have the time to fairly devote to the clients there. But still, an interesting one. Glad to hear that, Mr. Matt. Eric, you'll be happy to know, by the way, and listeners will be happy to know, if you missed Eric's session early in the morning in Amelia Island, like I did, then you're in luck. We got you covered here on the network because you can head on over. In fact, we're tweeting out the link right now. We'll include the link in the show notes as well for this and on the article on our website. We have the link. You can listen to the audio completely for free. Don't have to get up early. Don't have to drink Eric's maybe mediocre coffee. You can just get the panel straight for free to your ear holes on your device of choice. We got it all for you there on the network. Just click the link, sit back, or you already have it in if you have the app, or if you subscribe, you already have it in there as well. You can just go scroll back a little bit to the OIC audio, and you will find it there. And you can listen to exactly all these takeaways for yourself, I should say, in a lot more perhaps comfortable environs for yourself. We're moving on to, we got a lot of topics we got to get to on the show. We only got an hour here on the show, and it flies by every month here. But the big topic, as you guys might imagine right now, certainly big for you guys, Matt, over there at ORATS, and probably for you guys over there at Swan, and Eric, you guys as well, is just we're getting back into it. We're getting into earnings season. For a lot of people out there, advisors and even retail. I think this particular earnings season, a little bit of a breath of fresh air, because if you follow earnings, listeners, you know earnings are all about the micro, all about how much is this company literally earning, how much are they spending, what's their expense, all these things you can really focus on. From an options perspective, what are they pricing in from an implied vol perspective? What's the straddle pricing? What kind of move are they expecting? What did the market actually deliver in terms of move? How do these two things shape up? It's very discrete. It's very micro, and it's very one thing to the next. You can move on from one name to the next. Right now, these days, the macro trends are kind of all over the place. We have trade wars, will they, won't they? Real wars, perhaps, will they, won't they? All these other things kind of in the ether out there that can kind of be overwhelming after a while when you get all these things that people are scared of the trade war, they sell off the market, the trade war happens, the market rallies, all these crazy things going on. People kind of want to wash their hands and say, what's going on? So earnings is a nice palate cleanser for that. And Matt, I know you guys have been kind of leading the charge here from an earnings analysis perspective for quite some time. We're happy to be able to share a lot of that stuff on the Options Insiders. Hopefully you've seen that stuff. We tweeted out there as well, listeners, or of course you can go over to the ORATS blog and read it there for yourself. But Matt, you guys have been doing yeoman's work there, cranking away on all the legions of names and kind of breaking down what kind of moves they've had, what kind of moves they expect, what the market's pricing in now. So maybe walk us through what you guys have been up to. What are some of your takeaways so far? What you guys actually do when it comes to earnings analysis? And we'll get into all the good stuff about what advisors should be doing with this time of year.
Mark, you were great on this. You pushed me to get this report out and help me out, so I have to.
Well,
say
you know,
thanks.
It's surprising. For as much interest as there is in this space, there's a huge vacuum of information. There's like one Goldman study from like 5 years ago, and that's really it. So for you guys are literally filling this vacuum. Hopefully it's been accreting back to you, because you guys are quite literally the only game in town these days on this stuff.
Well, it was great of you to see that what we did would get some interest out there, and we do work hard on this. I was a market maker for a number of years and backed people on the floor, and earnings was always one of the biggest times for us trading single stocks. So we take a hard look at it. We do some things a lot differently than other folks do. And I hope this doesn't get too technical, but when you're looking at the expected move in a stock, you could look at a straddle price, and maybe if the stock's 100 and the straddle price is $5, you might expect a 5% move in the stock. But we look at it a little bit closer, and what we say is, well, it depends how many days to expiration there's going to be, because that $5 straddle is not going to go to zero necessarily even after the move. So you have to get an expected amount of that straddle that's going to be left after the earnings announcement and net that out. So instead of a 5% move, you might isolate just maybe a 3% move that you can isolate by a pretty complex process, but it really requires two things. One is, what do you think the implied volatility is going to fall to after earnings? What happens, as many of you know, before earnings, the implied volatility creeps up and up and up, expecting this large move, and then it comes down directly after earnings. And so you have to acknowledge that, and then you also have to understand that that straddle is going to be priced at different levels over different distribution of prices afterwards. So you have to determine that distribution. That it's hard to put a earnings distribution in your head. I thought it might look like a barbell. It's either going to move a lot up or move a lot down. Instead, it actually looks like a flatter normal distribution. So that was one interesting thing. And then armed with those two things, you can get an expected price of the straddle after earnings. So hopefully that wasn't too technical for people, but suffice to say, we do what we think is a good job of isolating the amount that the options market thinks a stock is going to move on earnings. And then what we do is we publish that for all stocks, and then we go back and we look at what actually happened. And so what we'll say is, well, here was the straddle price, here's what actually happened, and over the long haul they equal out. But then we're trying to find, are there opportunities? Are there ways to find where, if it's overvalued or undervalued, and can you make money one way or the other? So it's been a intricate and a very involved procedure, but it's something that again, has been near and dear to my heart for many years, being involved in the option market, Mark.
And Chris, I know.
Hey, Matt.
Oh, go ahead.
Yeah,
Chris.
go for it. Now, hey, Matt, this is Chris. I mean, is there an equity profile or a volatility profile that you're looking for? And I know there's a lot of different ways to play earnings. Last time we talked about calendars. Is that part of the mix? Because I agree with you. I mean, playing the earnings was something that we did on the floor quite a bit. And there's a lot of tools out there that kind of, yes, it's normally distributed and it's almost break even if you do this, if you repeat this process over and over again. So is there some edge there with respect to like a certain stock profile, stock price, volatility regime, or anything where you can kind of put the odds a little bit more in your favor around earnings announcements?
Yeah, so we have 7 signals that we look at. One of them just being, what were the past straddles priced at compared to what the current adjusted straddle, just the isolating the amount. That has an okay return for, and again, that actually helps you if it's very overpriced that you can, there is some quote unquote edge there. So, but if it's underpriced, there's no edge there, meaning if it's a cheap straddle, we found that you can't, it's, it only happens, you only win 30% of the time for a negative 1% average notional return, whereas you can win 65% of the time on the short side for that particular one. And again, like I said, there are 6 other ones that we've looked at. We're looking at things like, well, how has the historical volatility been compared to the implied volatility been up into the event? So, and that's actually been one of the stronger ones. So we've come up with some very interesting ways of isolating some signals. It's funny, over the close to 900 stocks that meet our kind of liquidity profile, 60% of them make money by selling vol, and the buy win percentage is about 40%. So, so overall, there is some overpriced straddles out there. Obviously, the problem is that these straddles can move a lot, but overall, what we're seeing is that, like many things, it does pay to be short volatility going into earnings.
It's funny you should mention that because we asked our audience that same question last week. Obviously, as Eric mentioned, our audience runs the gamut from basic, intermediate, and advanced retail to institutional traders. A lot of advisors out there floating around as well. So it's kind of a broad sample of the ottions user base. And we said, you guys, trading options during earnings can be a bit of a tightrope walk. Some people live for it. Other people live to avoid it. So what do you guys do? Do you guys hold your options positions through the earnings announcements themselves? If so, how do you approach it? You go dark side, you go light side, or do you prefer to trade maybe around the event but avoid the event itself? Or do you avoid earnings entirely? And after a week of them hemming and hawing and debating and firing away and fighting amongst our votes here, it was a pretty tight race, actually, at the end of the day. It came out pretty close, which is kind of what I expected. I thought our audience has a little bit of a split, too. They all like to do different things. But I kind of thought Dark Side would win, and that's kind of what took it very slightly by a hair. 28% saying, yes, they trade options through the event itself, but they go short premium, so they're doing what Matt was mentioning, kind of selling premium. That could be a rocky road, but just volume-wise, it seems to be the way people prefer and can work out. Obviously, when it doesn't work, it's pretty spectacular against you as well, but still interesting. And then 27%, 1% behind it, saying they don't trade through the event, but they trade around the event, maybe before, maybe after, taking advantage of maybe some volatility discrepancies going on there. 25%, a full quarter, saying, yeah, the whole thing's just too risky, I avoid it, which I can also get behind. I certainly understand how people do that. I'm not a huge earnings trader myself. And 20% coming in the laggard, but only by about 8% from behind number one, saying, yes, they trade through the event, but long premium. So I guess if you add those two together, roughly half, 48% of our audience saying they will trade through the event itself, which is kind of interesting. I don't know, Matt, does those numbers surprise you at all, or is that kind of maybe what you expected from crunching your own data?
Well, it actually is representative of the clients that we have. So we have some call overriders that want to avoid earnings. And then we have, our clients are looking to mostly sell, I would say, but if we can identify some good buying opportunities, I mean, people love to hear about that. But speaking of avoiding, so what we're trying to do now is, since it's somewhat costly to avoid earnings when you're selling calls, we're trying to filter down that list and say, well, it might not be as risky in these particular types of names. As Chris asked, are there profiles? And we would say, yes, there are some profiles that you can continue to, overwrite certain stocks in and through the earnings event, Mark.
And Dan and Chris, obviously you guys are busy managing the DRS, you're doing a lot of overlays on the broad indices, but earnings season has an impact on those as well. We talked about before, kind of effectively the muting of volatility that tends to go on usually during earnings season. All these names popping off actually as a whole, as an aggregate, tends to tamp down on volatility a little bit, which is kind of an interesting effect in and of itself. But I'm curious your guys' thoughts. Obviously, you guys, in addition to managing the overlays of things, you guys are also hosting a lot of the Swan 10th box events. You just did the Swan CIO Forum here in Chicago not too long ago. By the way, look for that audio hitting our network very soon as well. But still, it's an interesting thing. I'm sure you guys interact with a lot of advisors out there. What do you guys' take on advisors and maybe trading options through earnings season? Is this something you guys get asked a lot from the clients you guys, or I should say the advisors you guys interact with at your various events? Is this something you guys think advisors should be doing? Is it more of a kind of a really selective case by case thing? Is it maybe it's too turbulent that you probably avoid it? What are your takeaways in general on, this whole area of advisors? I mean, clients like it. Clients want to do something in this. They hear the noise, they see it. So they're probably getting a lot of demand from clients. What should the advisor be saying in this scenario? Maybe Chris, we'll start with you.
Yeah, I mean, it is a selective event because, our mutual funds are large cap, small cap, emerging markets, and foreign developed. So earnings announcements and index products is not a big deal. It's a non-event. It's not anything that we really look at because earnings in all those individual securities are coming in. It's a constant flow. But for some of our overlay products and some of our overlay clients, definitely it's something that we have to look at because, as you know, we do short premium. We are premium harvesters. So we have to be cognizant and use the same tools that, Matt talked about earlier. See where previous volatility straddles, strangles, all that was trading at before. So for some of our more specialized clients, yeah, we absolutely have to do an earnings analysis. But for the most part, where the bulk of our business comes from, it's more larger type products where earnings events really are a non-issue when it comes to assessing volatility.
Dan, same question for you. Obviously, you're in the Puerto Rico by way of Colorado office over there. Any thoughts on this kind of topic? It can be somewhat controversial when it comes to advisors. Some don't want to touch it. Others do it through client demand. Others want to do it for their clients. What are your thoughts on advisors trading in these somewhat turbulent waters?
Yeah, so I would sort of echo some of Chris's sentiment as well. I don't have a lot of direct interaction with advisors. Chris certainly has quite a bit more, and he's more in touch with their feelings and emotions. I mean, essentially, we're sort of synthetically in the last camp there of we trade around the event by just not being involved in the individual names. So that being said, there is sort of an awareness of when it's going on in the office, and there are certainly a few guys on the desk who are watching the names and see what's happening.
And Eric, same question for you, sir. You're going around the country quite literally meeting with advisors on a pretty much daily basis. Is one of the reasons it's so hard to get you booked for the show. You're always hither and yon all over the place. What do you hear from advisors around this time of year, I should say? Are they getting a lot of client demand to say, hey, I want to buy calls, buy puts, trade stuff around earnings itself? Is this something that they're still too new to options to really consider it? What kind of demand are you seeing on the advisors and the client side for trading this time of year?
Yeah, I would tend to agree with Chris and Dan. That advisors, at least the RIAs, are trading around events, and I'd also be remiss if I didn't congratulate Matt on the RIA and welcoming him to the congregation. It'll be nice to have him as a part of that more, and I know he's working very closely with colleagues over at NASDAQ with NDX and such, so that's really exciting to hear about. But, yeah, I think it's a smaller percentage. I think, Chris knows this. Chris and I were together at an event. It was great to have him on a panel a few months back for a university panel, obviously, with young students. And, Mark, we got to get you there next year for the game event. But, it's interesting there are, I think, more of the, discretionary advisors that run sort of like the family office practice that tend to, implement straddles or, more frequently, looking at earnings with long positions. But, overall, it's not as prevalent as you'd see. I think, it's probably more so with the retail retiree down in my home state of Florida that's, standing at their computer and, charting and following earnings and then implementing option strategies.
Certainly are a lot of those. My parents are retirees in Florida down there, so they're knee deep in that community. And you're right, there's a lot of that. A lot of their neighbors are pretty active in the markets, shall we say. Well, Matt, this is kind of your baby over there at ORATS. You guys are really kind of leading the charge in terms of readily available data around earnings and options trading. So any last takeaways here, for advisors who are maybe thinking about dipping their toes in these waters before we keep rolling on with the train that is advisors option?
Yeah, I think that we've mentioned some of the larger topics, such as it does pay in mass or in general to be somewhat short into where the straddles are slightly overvalued, but I would encourage them to get smarter on what's happening during earnings. You can ride through the storm and it can be profitable. We do have earnings in our back tester as well, so they can simulate some of the events going in and see how, just to improve your education around earnings is what I would kind of beat the drum on. And this is great that we're spending this much time on it, Mark.
Yeah, it's a popular topic, particularly this time of year. We get 4 times a year, we get inundated with questions around earnings and options trading, and this is certainly one of them. And you guys have always asked for data, and you guys have it now, courtesy of the folks at ORATS. So if you're not hitting it up on our website or on the ORATS blog, you're doing yourself a disservice, because you guys, just judging from your questions, you all have the same questions. Hey, should I be lean long premium? Should I lean short? What should I do here? This kind of stuff. Is there any data on this? Yes, there is. It's right here. And they actually go the extra mile. It's not just, what's the market pricing in right now from a movement perspective? Okay, how much did it move? Okay, done. No, they go back previous quarters, same time of year. There's a lot more analysis there than you probably would expect, because it's good stuff. So check it out. You can find it on our site or on indeed the ORATS ORATS blog there to learn more. Well, we got to keep rolling with the buzz. And it's funny, a lot of the buzzworthy things that have been happening in the world of options that pertain to advisors and asset managers and things have actually been as a result of you, Mr. Cott. You've been kind of a little busy beaver while you've been off the show, running around, hosting events, hosting coffee sessions and panels and everything else, including your recent summit on fundamental and technical analysis. Look at you getting technical on us here. So break us down on this. What was this? Is this a first of its kind event? And what were you guys doing? And what were some of the takeaways out there for the advisors in the audience?
Yeah, it's part of my vernacular now. Well, one of the things that you're familiar with, Mark, and I think that Chris and Dan and Matt is probably as well, is that we don't really silo the retail, institutional, and advisory at OIC, and we try to work all together. And so one of the things that we're very proud of is we've hosted these in fourth quarter. We've also done it, the last few years around the summer, where we bring a online webinar to our audience where we combine it in a hybrid way. We have retail and advisory, and we offer sessions throughout the morning into the afternoon. Typically, we have these as CE approved. Obviously, Mark, I'm working on a program right now with the former IMCA, which is the Investment Wealth Institute. So, that's a whole nother topic, but the options certificate program that we're doing. But the fundamental technical analysis, that really came about, giving credit to Mr. Burgoyne that we all know, Joe Burgoyne on the retail side. There had been a lot of questions that have come in relative to his Wide World of Options program and such that, investors and as well as advisors, were curious about this. So, I was really pleased. I had 3 of colleagues from the Advisor Leadership Council. Randy sits on that as well. So I had 3 of my colleagues from different channels in the industry, talk about how they utilize fundamental analysis as a decision maker in terms of then moving into option strategies. And then we had obviously other folks from, different firms who brought their derivative knowledge to talk about technical analysis. We had a guest author who's written, tons of books on there. So really, the takeaway was, and obviously this is archived, Selfless Commercial Mark, optionseducation.org. For listeners, they can go on our website and view that summit that occurred in the end of June. But it was an opportunity to kind of take two topics, fundamental and technical analysis, and utilize, individuals that we know in the industry and, how they kind of use those techniques and sort of find solutions before they put a, strategy on.
Mr. Matt, I know a lot of your clients utilize a lot of your back tests in conjunction with, or perhaps as part of some sort of technical analysis strategy. So I'm sure you're probably familiar with a lot of this kind of stuff as well. What are your thoughts on Eric and his team over there at OIC putting this on, and some thoughts on, in general, maybe your thoughts, because this is kind of a hotly debated topic on our network as well. I've never been as much of a technician. I think a lot of that got beaten out of me on my time on the SIBO, trying to use various technical systems to try to scalp gamma and seeing all of them not really work very well. So that kind of broke me of a lot of my interest in technicals, but other people's have different experience. I know you had a different experience there, Matt, as well. So maybe what are some of your thoughts? Maybe in general, we'll start there on the applicability of technical analysis to options trading, and then maybe any specific thoughts you have on Eric's event here.
Yeah, I'm looking at optionseducation.org right now. I think Eric is out in front of it, because we're starting to hear a lot more from clients looking for options information to use in their technical analysis. I was just in New York on the Battleship Intrepid for BattleFin conference, and that was mostly data firms. And we had a lot of interest in firms that are kind of options as a second language, but know that there is a lot of information in things like 30-day, or what I call the VIX for each stock, or VIX for each symbol. So we calculate, VIX for all of the 4,500 or so symbols out there, and people know how to look at the VIX in relation to the market, but there's also a VIX in relation to individual symbols. So people are interested in that. They're interested in put call slope and how that slope changes before large events. For example, the market got really shallow, meaning the puts got really cheap before the February event. People are plugging these into their models. We have some of the largest hedge funds that are consuming all the data that they possibly can from us in the options world, so they can plug them into their models. So I think this is going to be a big driver for not only option traders, but people using option information to help their technical analysis and add to the overused indicators, and now change to some underused, but I think very important indicators of what you can get out of the information on the market from option-related information, Mark.
And Chris, your title says it all. You are the chief technical strategist over there at Swan. So that implies you use a lot of diehard fundamental analysis. Now, what technical indicators do you use when you're out there slinging your overlays for the DRS?
Yeah, well, we do use a lot of technical analysis. I'm a chartered market technician, which was something that I got after I left the floor, because, I mean, as we all know, as former market makers, we're trading bid-ask. We're kind of acting like bookies. We have a different agenda down there as opposed to trading upstairs, prop books or managing portfolios, et cetera. So what I've done is really apply technical analysis to volatility assessment, assessing skews, applying it to term structure assessment. So I've seen technical analysis go both ways, where you're actually applying some of these, these old rules that were part of equity technical analysis to the actual option prices. But what we've really developed is spending a lot of time transforming traditional basic technical analysis that would be used on equities, and then transferring those basic concepts to volatility, skew, kurtotic options, and try to extract. It's kind of like what Matt's doing. I mean, every time he's doing a back test or something, he's extracting information. And there's a term in technical analysis is you're a technician is like a lawyer, right? And all I'm trying to do is present a preponderance of the evidence. If I can get a preponderance of the evidence using these different tools, well, that makes a case for what? It makes a case for a trade or a position in a portfolio or what have you. So it's a different twist. A lot of people, when I was on the floor, it's kind of like what you just said, Mark. When I was on the floor, everyone a lot of people were like, technical talents is voodoo, it doesn't work. But I think it's just picking the right tools, picking the right indicators, and trying to apply them a little bit differently to different products. And I think that's something new, and it's one of the things that I've always really wanted to do, and what I have done in my career is bridge that gap from options using technical analysis. And I think that's really the next great thing is like, okay, teach people about technical analysis and then how they can use that and apply that to the options world.
Yeah, it is interesting to see how there is really very little overlap between the two. A lot of the guys I know who've spent their lives in the options trenches are some of the most anti-technical people I know. I think there's something about the options mindset or skill set or the combination of the two that breeds in an innate contempt of technical analysis. But you're right; it is an interesting area to explore. I do like your analogy about the technical strategist is also the lawyer. I never really heard it put in those terms before, but it makes a great deal of sense. We got a lot more buzz topics to get to, but we also got, you guys have been inundating us with questions. I want to make sure you guys get some time here as well, particularly questions about our last episode. So maybe we'll get some of those a little bit early here in the office hours.
It's time to answer your pressing questions about options. It's time to start our office hours. You can become a part of this segment by leaving a question on theoptionsinsider.com, emailing us at questions@theoptionsinsider.com, or via social media at twitter.com/options, facebook.com/theoptionsinsider, or stocktwits.com/optionsinsider.
All right, everybody. That music means the shingle is up. The office hours are open. Come on in and ask your question, just like a bunch of you did. I knew when we talked about, we got into the hardcore stuff last episode, the calendars and diagonals. I knew a lot of you guys would be hitting us up, and you did indeed. We got a bunch of them here. Let's just go in order, see how many we can get to here. Then we'll get to the stuff beyond last episode, which is a ton of those too. We have to do another all question episode one of these days, just to kind of keep the listeners sated. There's so many of them. All right, Option Night, like that handle. He writes, loving the Advisors Option Show. Well, we're loving you too, Option Night. The love is mutual. He goes on to write, great stuff as usual from the OI Network. Well, thank you very much. He goes on to say, he was surprised to hear we did a whole episode about calendar spreads. Are there a lot of advisors out there doing calendars for their clients, or is that more of an educational piece for the bleeding edge of the advisor space who are looking for something a little bit more compelling for their high-end clients? Either way, I love the episode. I think more advisors should be doing this stuff. I just wondered what you boots-on-the-ground guys thought about the actual reach of the strategy. Well, we kind of agree with the Option I think, and we think we kind of even said that as kind of the caveat at the beginning of that episode. This was kind of like the 201 kind of stuff. We call the segment Options 101, but that was really kind of 201. That was kind of a little bit next level. We don't expect a lot of advisors out there to really be utilizing that, but it's a good thought process to have as you're considering how to utilize these strategies. And then you're right, there is that bleeding edge of the advisor space that is out there doing this kind of hardcore cutting edge stuff. And for them, that episode works on multiple levels. It feeds them, it helps build up the ones who maybe want to get there someday, and it kind of plants the seeds in the minds of the basic ones to say, hey, that's something I could potentially consider as I grow my options arsenal. But Eric, maybe you're a good one to ask, because he asks us for our boots on the ground folks. I don't know anybody who's more boots on the ground with the advisor's option space than you. I know there's a lot of the go-to strategies that the advisors typically use when it comes to options, covered call, protective put, the collar, that sort of thing. Do you get a lot of advisors coming to you looking for, shall we say, this kind of next level stuff like the calendars, or is it kind of as he alluded to it, a little bit more for like the bleeding edge of the space still?
It's interesting, and kudos to you, Mark, for bringing that out. I think it's a great topic on calendars. And then obviously you've talked before, obviously with butterflies and condors and straddles and such. It ties back to a little bit about this program that we're doing now with IWI, because, we do get into synthetics. We get in, a little bit more middle and left lane. And the answer to options Batman, or I'm trying to I'm trying to remember what his name was. The man behind the curtain who asked you this question about calendars, but
Option Knight.
Option Knight,
like
the
that.
Dark Knight. That's who you're referring to. Well, Options Knight, I'd say that from what we know, at least advisors that call into the 888 options line and our great folks at Investor Services, it's not as if we get a lot of calls and calendars, but occasionally the RIAs are utilizing it. But I think the answer, and you said it, Mark, is that it's valuable to bring these more high-level discussions out there. It's not as if what I would say to the person that asked the question is, we tend to see that advisors are doing it more for themselves, not necessarily for their clients. So they might be doing these calendars and trading for themselves. That's at least what I hear with my boots on the ground. Then they're absolutely implementing it for their clients.
That's interesting. So they're doing it, and they're doing it for their own accounts. And for the clients, it's here's your basic covered call and be happy. I like that. That makes sense. Sometimes it's hard to implement some of these strategies across a large. You have a lot of SMAs you're dealing with, and things could be a little bit of a hassle. So I could certainly understand that. Some of them may not be comfortable doing that, and the clients may not be comfortable. So a lot of reasons why that may indeed be the case. But yeah, that's Options Night. That's kind of what we said at the beginning of the episode. It wasn't for everybody, but it's kind of a good primer, a good starter for people out there who want to head that way. We got so many more questions on this topic here. Fly Guy has more of a technical execution type strategy question. He says, hey, hello to you, Mr. Fly Guy. Hey, what do you guys do with your long calendar spreads? Do you close out the short leg if the stock doesn't move, then keep the long leg, or just close the whole spread out? You guys remember, listeners, we primarily talked about long calendars on that last show. So let's say you're buying the 1 month out at the money call, selling or 2 months out at the money call, selling the 1 month out at the money call. So you have that spread. When the front month goes away, the short leg, what do you do? That's kind of what he's asking. Chris and Dan, you guys are out there kind of executing the strategies for Swan. I mean, you're kind of effectively legging into diagonals all the time through the DRS, so a little bit of a different scenario, but still somewhat analogous. And maybe in your own personal trading as well, I'm curious, what are your thoughts? What are your use cases when it comes to this kind of scenario, the long calendar? Let's say you buy it, it goes your way, so the stock doesn't move at all for the first month, and that first option expires worthless. Now what do you do? Do you close out the whole thing? Do you let the second leg kind of ride high as like not a free, but a lower cost long option? What do you guys do? Maybe Chris or Dan, whoever wants to jump in.
Yeah, sure. This is Dan. I'll hop on. So my favorite thing to do is always what I planned to do when I got into the trade, right? First and foremost. And that's sort of the generic answer. I mean, one of the things you have to be careful with is sometimes if you went into the trade with a plan and things changed and you start making second, third order decisions, things can change against you and you'll find yourself in a bad situation. And so that's something I'd be careful about. But generally, whatever you planned at the beginning.
So many of these here. We got Diligit, however you pronounce that, saying, hey, great show on calendars. Well, thank you. He says, I'm still working up to that level. Not sure I'm ready yet, but when I am, you guys will be the first to know. Well, we'll look forward to your posting on that. You are ready for calendars. I'm ready for calendars, guys. Okay, well, let us know. Glad to hear you're enjoying the show. Here's one that's right up your alley here, Mr. Matt. TLC saying, can you do a show on short calendars? Kind of the opposite of what we just talked about on the show. Why should people use it? Pros and cons versus long calendars. Maybe a cool back test or two. So Matt, I know you're probably going to start dreading coming on the show because our listeners always end up giving you homework. But on the flip side, kind of means they're interested, right? So what are your thoughts maybe on that? And is this something you guys have ever back tested before? Have you had a client come to you saying, I want specifically short calendars? And what was the outcome, if so?
Funny that you would mention that, Mark. I just ran a back test seeing that question come up. And also I have had a client that is looking to get some theta in to pay for some out-of-the-money puts, and they were looking at a short calendar. What we found is the short put calendar, where the puts are a little bit out of the money, works better than an at-the-money or a call calendar. What we're seeing is that steep skew and that the term structure with the and Chris talked about this last show, with the outer months at a much higher volatility than the inner months. It's now looking like the short the short calendar, the short put calendar, especially because of the steep put call skew, is starting to show some returns. And I'm looking at it right now. It looked like it's flat this year, made some money last year, flat the year before, lost money in 2014, made money in 13 and 12. So that looks like an interesting, very interesting strategy, Mark.
Interesting as well. I love our listeners because they always throw out some crazy idea. I wouldn't have thought of a short calendar back test before this episode, but that's why our listeners are so fun. You know what isn't fun, though, listeners, is that music, because that means we've come to the end. It's hard to believe we've done a whole hour. We could probably go another 3 hours just on these questions. But unfortunately, we'll have to wrap it up there. I can hear the guys right now say, 3 more hours. Oh, my God. Don't worry. You're off the hook. You're done. But we do love you guys sending in so many questions. Keep them coming. Like I said, maybe we'll do another all Q&A question here on the Old Advisors Option Program because you guys have so many. In the meantime, though, there are a lot of great places you guys can go to get those questions answered, including our friends at optionseducation.org and Eric's team at the Options Industry Council. Eric, before you head back out to go hither and yon, preaching the gospel of options, what's coming up over there in the land of OIC? And I know you guys kind of just did a big kind of rebrand as well. Tell us kind of what was behind that and what did you guys do?
We did, actually, and thank you, Mark. Actually, you know, the OCC recently rebranded as part of the growing role as a SIFMU. You know, we're influentially a thought leader and steward of the U.S. exchanges at options industry. So through OIC as the leading educator, you know, of exchanges at options to the investment public, we encourage all your listeners and everyone else to go take a look at our website. There's a YouTube up there to show the new branding that we have for OCC, for the Options Clearing Corporation. We're very proud of it. OCC, the foundation for secure markets. So thank you for bringing that up.
And if listeners want to check out your IMCA, you know, certificate program or any of the other cool stuff you guys have coming down the pike from the OIC advisor team, where should they go? What should they do, sir?
Absolutely. Thank you. So the IMCA, formerly IMCA, now IWI Investment Wealth Institute, they can find the certificate program on the IWI website or links through optionseducation.org. And I would also give a shout out to the wonderful folks at Investor Services, which is, as you know, Mark, those guys that are as busy as you are. They don't sleep 24/7. No, I'm kidding. At Central Standard Time, you can reach those folks at 888-OPTIONS.
There you go. And check it out for yourself, optionseducation.org, if you want to see what Eric and his team are cranking away on. Click on that advisor tab on the far right there. You have to register, but it's worth it. You get access to all the good stuff, all the data we're talking about here all the time on the show. A lot of those studies come from our friends at OIC, so check it out for yourself. It's always good when you sit down with clients to be armed with some data, and they help you do just that. Speaking of arming yourselves with data, you can also do that a lot of times when you're got some back tests. It doesn't have to be short calendars. It could be whatever the heck you got cooking over there in that noggin of yours. So, Mr. Matt, if I'm interested in some back tests, or maybe, hey, maybe I want to do some money management with your RIA. You know, I got about $218 burning a hole in my pocket. What can you do for me?
$218. I have some great strategies for you, Mark.
Let's do it. I like it. Let's turn it into a whole 300 by the end of the show.
We're doing, quite a bit of back testing here still. We're continuing to add functionality, combining strategies, using technical analysis, as Eric talked about. In technical analysis, now you can interface with our back test, so that's been quite popular. I'm going to do an interview. I'm surprised Chris didn't give me a little business for my interview with Jill Malandrino at NASDAQ, but we're going to do one, and I'm hoping to get someone from the OIC on, so I'm hoping to work ORAT's OIC a lot more closely in the coming months, and that's what we got going out here, Mark.
There you go. Check them out, orats.com, to learn more. Or, of course, give them a follow on the old Twitter, Option Rats. Easy one to remember over there. And last but not least, Chris, you guys and the team at Swan have been fighting the good fight out there, doing the bleeding edge of advisors education with your Wealth Managers Forum, also with your 10th Box events. What do you guys have coming up on that front, sir?
Yeah, first, I did know that Matt did an interview with Jill. I have not seen it yet, But now that he reminded me, what's that saying? It's payback is sweet or something like that.
Yes,
so I'm definitely going to check out that video.
I do recall
so.
he had some interesting comments about your appearance with Joe. Mine was beautiful, so I don't know what you guys could comment on.
But anyways, going back, we're continuing with our 10th box seminars, which is a series of regional due diligence meetings. So it's a great chance for advisors, investors to sit down with the portfolio managers and discuss the challenges in today's market and how the defined risk strategy can be part of their investment solution. We also just came out with a brand new white paper by Mark Odo that's entitled New Risk Metrics for a New World, and that takes a look at assessing portfolios outside of using traditional risk measurements.
There you go. Check it out for yourself if you want to register for the events. It's actually 10th box, the number 10 TH box, so 10thbox.com. Click on there and you'll just hit the find events button and you can see all their upcoming events. And of course, you want to check out that blog from Mark or the rest of the research team. Interesting stuff over there in the newsletter and the blog and everything else. SwanGlobalInvestments.com. And on behalf of Chris and Dan and Matt and Eric and indeed myself, I thank all of you out there for downloading, streaming, subscribing, for tuning in live, and of course for sending in so many great questions. We love them. Keep them coming. We'll get to more next time. I promise. I always promise that, but we try to get as many in as we can. There's just so much going on in the world of advisors we want to keep you abreast of. But thanks again for tuning in, and we'll see you next time for more of The Advisor's Option.
You've been listening to The Advisor's Option. The Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Swan Global Investments. Since 1997, Swan has been the leader in hedged equity and option income strategies with GIPS verified results. Swan provides unique and valuable solutions to the inherent weaknesses of asset allocation, offering defined risk strategies that allow upside participation while also protecting advisors and investors against market risk. For more information about our advisor program for separately managed accounts, Swan Defined Risk Mutual Funds, or our proprietary option overlay strategies, please contact Randy Swan at swanglobalinvestments.com. Think outside the style box. Think Swan when deciding on risk management solutions to market risk. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the CBOE over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit orats.com or email Matt Amberson at matt@orats.com.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.